Welcome back. Let's talk about Epigral. The company reported a mixed set of earnings with the revenues going below estimates, down 7%. Margins remained healthy, in fact, at the upper end of the guided band of 23 to 27%. More importantly, what is the way ahead for the company? We do have Maulik Patel, who is the chairman and managing director, who joins in to discuss more. Maulik, as expected, there was weakness in realizations. What wasn't expected was a decline in volumes as well. Could you give us a sense on what kind of volume growth are you targeting, and at what point do realizations start to turn? Because, prices have fairly seen a big fall. A lot of people do believe that maybe they've bottomed out and from here on we can see an increase. In light of that, what kind of growth or, performance do you expect in the next 3 quarters?
Yeah. So, major our revenue at last expansion, what we did in the CPVC as well as in the epichloro, both molecule are import substitute. And in the major consumption happening in the Q3 and Q4, because during the monsoon time, the consumption of the CPVC pipes as well as the epichloro, which is a major consumption in the epoxy resin, which is in the paint and coating and the construction sectors, is almost down. And this time, the early monsoon has lowered the demand in the Q1 itself. But going forward, we are expecting H2 will be much stronger because both the products are very strong and the major consumption happening in the H2 in the Q3 and Q4 in this financial year. Volume growth, we are expecting close to 10% in this financial year. And going forward also, we are doing a capex. We are expanding capacity in both the molecules, which are import substitute based on the growth we are seeing in India in terms of the construction, coatings, and the windmill sector. We are expecting very high growth in both the molecules, and our expansion is also on stream and going to be on stream by mid of next year.
So what happens to the realizations? Volume growth, we take your point on board. Second half looks very strong. You've expanded capacity, but realizations, they've been coming down structurally. How long before we see a turnaround here?
Yeah, if you can see that realization is also going down as the raw materials prices are also coming down the same time. That's why if you can see our margin has remained intact irrespective of the realization is going down also.
Understood that. Mr. Patel, at the end of Q4, please correct us if you're wrong. We understand that you had given a guidance, especially for volumes, that it will trend in the range of 15 to 20% with EBITDA margins in the range of 25%. So FY26, are you trimming down the volume growth as far as guidance is concerned to 10%? FY27, post capacity on stream, can you quantify the guidance that you expect?
Yeah, that's right. The chlorotoluene and derivatives, what we have expanded and what we have commissioned by end of March. Normally, that kind of products is mainly going into the specialty chemical, which is agrochemicals and the pharmaceutical intermediate, which is taking little more time for approval of the customers, and routine to reach to a initial approval, trial orders, and the commercial quantity will take little more time than what we have thought of. So we are expecting, I think by Q4, we are going to get a volume from the chlorotoluene and derivative business. That's why we have cut down a little bit shorter the volume, but we are expecting the Q3 and Q4. We are very bullish, and we may, the volume may increase in this in the remaining products.
All right. What about your domestic export mix? You've been saying that you are looking at domestic as your key growth driver. Just spoke about import substitution projects as well. But around 10 to 20% of your sales, which does come in from exports, facing some uncertainty around Europe too. What's your prognosis of growth for both exports and domestic in this year?
As a Epigral, as a company, always focus on the domestic growth, and we have always focused on the import substitute molecule. So our export is hardly 10% of the entire company's revenue. So 90% we are domestic focused. But yeah, in the European segment, there is no change in terms of the export, in terms of the quantity. And we are expecting going forward as a chemical sector is going down in Europe in terms of the manufacturing. They are facing a lot of issues after the energy started facing issue from the Ukraine and Russia war. We are expecting the volume may increase in the European segment, and that's what we see in the going forward.
Mr. Patel, so FY26 capex guidance was 450 crore, which is something that they've alluded to, saying that there will be a few capacities that will come on stream. Going forward, will you go slow on capex given the fact that demand outlook is slightly subdued compared to what you had envisaged earlier?
No, we are going to continuously expand our business in terms of the chlorine derivatives. So we have a land availability in the existing complex, as well as we have purchased a land 2-3 years ago for the future capex. So next 5 to 7 years, we are continuously focusing on the import substitute molecule. We are continuously going to do our capex where the India requires, and the import substitute we can able to do it. So that strategy we are continue. Capex also going to be continue, and yeah, so that is we are not going to stop or any full stop in terms of the capex of any, and in the future in terms of the volume expansion.
And what about chloralkali and specialty? Where do they stand in terms of overall contribution? Where do you expect this to go going forward? Since you have some capex coming in other parts of your business, what happens to this mix?
So this mix as a long term, we have see we are going to end up with 70 and 30%. 30% revenue will come from the chloroalkali, and the derivative segments, it is going to come on the 70%. So as of now, we have reached to 50%, slightly lower than the last quarter because of the the price mix, the revenue mix has changed a little bit in terms of the pricing in the chloroalkali and the derivative segments. But going forward, we are expecting 70% revenue will come from only from the derivatives and the specialty chemical. And our capex is also going in that direction only.
Understood that, Mr. Patel. Thank you so much for joining us, speaking to us about how Q1 fared and the plans as far as the rest of FY26 is concerned. Well, as you can see on the bottom of your screen, some time ago, you did see the results of Free Cement. Appears to be a slight miss to what the CNBC poll was indicated, but more on that later. We'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.